afternoon, doctors. This is Bill Nolan from the Williams Group. I'm president of our Practice Transitions Division, and it's my pleasure to be with you for the next 20 minutes or so, talking a little bit about a subject that's near and dear to all of our hearts, navigating the partnership path. It's something that I've spent the last 20 years of my professional career doing almost exclusively here at the Williams Group. And so we're going to just share some ideas about that. Some of you may be contemplating a partnership. Perhaps even some of you are in some type of a partnership. And so we're just going to cover at a high level some really important things. And I'm going to give you hopefully some resource opportunities at the end. There'll be a few minutes at the end for questions. I'm sure most of you know how this go-to technology works. There's a little question at the bottom of the dashboard there that you can just ask questions and they'll come through to me. And but sometimes if you don't get a chance to answer a question, there'll be some emails at the end that we'll be able to do that. So let's we're going to do is just talk a little bit today about navigating the pathway in this very complicated area of creating a partnership. There are probably maybe 60 issues to discuss, but I try to break them into the kind of what we think are the 6 key issues to consider. First and foremost, why a partnership? And we're going to talk about each of these in a little bit more detail. But just to kind of set the stage today and give you a roadmap for where we're going to be heading. So why a partnership? What amount does the partnership, how much of a partnership am I going to have? What amount of partnership will I be in? What's its structure? Very important area. Compensation, issues that surround the very important buy-sell triggering events. We'll talk about those. And then, of course, the very important tax issues. So our 6 points to discuss at a high level are why a partnership, what amount, structure, compensation, buy-sell issues, and, of course, the all-important tax issues. Let's talk a little bit today. Let's start with why a partnership. And that's going to be a personal thing for everyone. I have tended to come to believe that after doing this work for a long time, one of the things that's probably never discussed early on, and to be fair, it would probably be appropriate, but I always kind of refer to this as the entrepreneurial dilemma, meaning that anyone who owns their own business, so for us in optometry, for those of you who own your own practice, and whether you're currently in solo practice as an owner, you may have associates, but you own the entity in its entirety, or whether you're in a multiple doctor setting where there are multiple owners. At some point, most people have a desire, not necessarily to stop practicing optometry, but they'd sure like to get out from the responsibility of owning the business. And so often as a doctor who has some foresight and looks down the road a little, getting out of my ownership interest in my practice becomes more and more important the longer I own the practice. And so that's kind of the entrepreneurial dilemma. If I own all of it, what is going to be my succession plan? What is going to be my exit strategy? Who's going to buy out my interest in the practice? So that's often a great, and I think a very valid motivator to think about bringing in a partner and creating a partnership. And probably that's the first reason, succession planning, exit strategy. And the second very important reason is shared management. You know, when you, and I think that has become increasingly challenging today, is to run and manage a successful practice with all the pressures in the marketplace, with all the pressures in the third party arena, with all the challenges of many of the big box retailers, with private equity, with consolidators and people that are trying to roll up practices. Trying to go that alone can be very difficult. And so from a collegial standpoint, many doctors would like to have another colleague in the practice to share some of those management responsibilities with them. And I think that's a very legitimate reason. So probably your 2 biggest reasons that people call us and want to form partnerships or discuss heading towards a partnership is this entrepreneurial dilemma. How am I going to get out of my practice ownership responsibilities and an exit strategy and have a good solid exit strategy? And their second big reason is shared management. And so I think those are probably the two biggest reasons that people decide they want to get out. To be honest with you, there's a reason they call it the independent practice of optometry. For a lot of us in optometry, we are a rather independent group. And so for some people, the thought of entering into a partnership is challenging because they don't want to have to give up the control. I wouldn't mind someone sharing some of the responsibility, but many of us want to be able to keep control. So a lot of people will ask me, if I form a partnership, does it mean it has to be 50-50? Or can it be something less? Can you have a partnership that is 75-25? And the answer, of course, to that is absolutely you can. Something you see quite a bit is, depending, of course, on the age of the partners. Sometimes you'll have two partners that are 50-50, and you might have one or two employed associates in the practice, one of whom or both of whom may be desirous of some ownership. And sometimes what I'm asked a lot is, if my senior partner is going to transition out of the practice, can I have a right of first refusal to buy some of his or her interest as they retire, and yet keep some to bring on one of our associates as an owner? So very recently, I did a transaction where the senior doctor is leaving. His current partner, is going to buy 25% of his 50%, and they are selling the other 25% to their associate who's been in the practice 2 years, and she's very desirous of ownership. And then at some point down the road, that 75% partner will sell probably most likely 25%, and those two individuals will be 50-50 going forward. So you can structure your partnership in lots of different ways. There's no one size fits all. And a lot of what determines how your partnership is structured are the wants, the needs, and the desires of the people that are involved in the transaction. So one of the things that we try to do at the Williams Group is get a good understanding of what everybody wants out of a partnership and kind of what they're looking for in a partnership, so we can structure it in a way that will serve those ends of all the people involved. If you are currently in solo practice, and this would of course be very true if you're in solo practice, and currently your tax and legal structure of your practice is a sole proprietorship, meaning you file a Schedule C, then almost invariably when you create a partnership for the first time, some kind of a structure has to be chosen. Because at the end of the day, a partnership is a legal arrangement between the parties. It's not just that we have decided to share profits. We are actually, when we form a partnership, we are actually forming a legal arrangement between the parties. And that legal arrangement can take the form of a sub-S corporation. Many practices today are a sub-S corporation already, even though they are owned by one individual. A 1065, that's just the tax return you file for a partnership. And a 1065 partnership means that you might have been a solo proprietor filing a Schedule C, and you took on a partner. And once you take on a partner, you can no longer be obviously a sole proprietor, because sole, S-O-L-E, means one. And so by definition now, once I have a partner, we have to change our legal and tax structure to something else. And when a solo practitioner takes on a partner, the default tax status is a partnership, a 1065 partnership. Some people are still C corporations, although if you had not formed any kind of a legal entity yet, probably in many ways the least desirable desirable structure for you would be a C corp. And then finally, many partnerships are being formed today as LLCs, or depending on the state, you will often see that they are PLLCs. And that term stands for limited liability company, or professional limited liability company. In many states, all professionals, doctors, optometrists, dentists, veterinarians, accountants, if they are forming an LLC, their status is PLLC, designating that this is a professional organization that has formed the LLC. And each of these have a lot of tax and particularly compensation implications. And I think we're going to talk about that at the end in section 6 on tax issues. One of the things that may really determine which one of these structures is best for you is the attitude and the belief of the partners towards compensation. For example, in an S corp, your compensation is you're limited much more than you are in some other structures. So these are the structures. There's sole proprietors, but once you have a partner, you're either going to be a sub S corporation, perhaps a partnership, or an LLC. And you can also tax an LLC as a partnership, or you can tax it as a sub S. So you can see there's a lot of different issues to consider, and compensation being maybe one of the most important when you're deciding what structure that you want to be. That flows nicely into a discussion about compensation. Over the last 20 years or so, having done been involved in a lot of partnerships, I would say one of the keys to happy partnerships, successful partnerships, is that every partnership has some form of compensation amongst the owner-doctor partners that is based on the production of the individual doctors. If we simply were just going to pay all the bills in the partnership, and after all the bills were paid, whatever money was left over, we were going to split equally among the owner doctors. And there are some compensation models even today that are structured that way. Generally, it always invariably over time creates a rift in the practice, because the high producing doctors, either because of their ability to chairside dispense, or their ability to, they are just incredibly efficient. They may have integrated a scribe into their practice, that making them being able to see more patients in a shorter amount of time, or in a same amount of time that I'm in the practice, thereby creating higher production. Over time, those high producing doctors, for whatever their reasons, will tend to become disgruntled if there's not some production pool, and that some of the compensation for a practice is based on production. A lot of practices today use a combination of production and ownership. And so they will take the net income, the dollars that are available to pay owner doctors, and they will pay those doctors on some percent of their production and some percent of what they own. And one of the reasons that this ownership, I'll call it ownership pool of money, has become very popular in a lot of practices over the last 15 or 20 years is because it's the young doctor coming out of optometry school, and then depending on a lot of factors, many young ODs are coming out of school north of $200,000 of student loan debt. And so for those doctors, if all of their compensation is based just simply on production, there generally won't be enough money for them to pay themselves, pay their student loan debts, and pay the debt necessary to buy into the practice. So one of the things, and I first encountered it, some 20 or 25 years ago, where practices were starting to then say, okay, ownership needs to mean something to the young doctor. There needs to be some part of compensation based on ownership. So often you see a combination of the two. But again, all very successful partnerships have some part of their production as a component. Production is a strong component and a big component of their compensation. Another very important thing, and this is very true whether you're in a current partnership or not, and we do a lot of this at the Williams Group, or whether you're a first time going down the road of bringing in a partnership, there are some very important things in terms of what we refer to and the lawyers refer to as the buy-sell issues. And many doctors are confused when they buy-sell. They think that means the the document, the legal document that sells an interest in my practice, and it's not. That's an asset purchase agreement or a stock purchase agreement. But buy-sell is generally a separate agreement, a buy-sell agreement, that dictates for owner doctors how, if there is an occasion to have a triggering event, how do we have an orderly distribution of that partner's ownership interest in the practice. And there are generally 5 triggering events. And when we say triggering events, meaning it triggers the sale or the interest I have in if one of these events were to occur, it will trigger my sale of my ownership interest. And those 5 events are death, obviously disability, retirement, voluntary withdrawal, or involuntary withdrawal of a partner. And so there are 5 triggering events in optometry, and it's very important when you form them. I think almost, and maybe equal to the importance of compensation. The doctors really, and we do a lot of, for practices that are already currently in, they have a corporation or they have partners that are already in a partnership or in a corporation. We have a lot of doctors who will come to us and ask us to review their buy-sell issues to see if what they decided 20 years ago still is germane to the practice of optometry today. And so, again, and if you remember back from, that second slide, when we talked about structure, a partnership is a legal arrangement between the parties. And so one of the really important necessary legal documents among the parties is a buy-sell agreement. And that is generally, if you're in a corporation, sometimes that the buy-sell is all covered inside of your shareholders agreement or bylaws. Sometimes it is a separate document, but it's very important to think about, hey, if one of us were to die or get disabled and couldn't practice, or I want to retire, or what if I'm here 5 years and I decide, I've had a couple over the last 10 years, as there's been 5 or 6 new optometry schools opening. I've had some doctors want to leave their partnerships to go back and teach. They always had a desire to perhaps teach an optometry school. And so they have wanted to get out of their partnership. That's called voluntary withdrawal, because they wanted to do something else. So these are all important things when you're setting up a partnership. I don't think there's been any practices that I've ever been involved in that the tax implications of the practice have not been critically important. The tax issues are just very, very important when you're coming into a practice. Many of you that are in sub-S corporations, because of compensation, if you're ever adding a third partner into your corporate structure, one of the things you may want to think about is converting your corporation to a partnership, especially when the partners or shareholders want to be paid commensurate with what they're producing. And so a partnership, a 1065 partnership, gives you some great flexibility. Now, a lot of you are going to be worried about, is there going to be an issue with NPI and credentialing? No, there won't be. And one of the strategies, one of the things that our tax partner, Brad Work, has kind of shown a lot of clients, is that the entity in which you own your ownership interest can be a 1065 partnership, and it can be just a straight partnership. It can be a limited liability partnership, depending on your attorney and your state. But you have a partnership. If you can visualize this, it sits on top, and that partnership owns the practice. It owns the chairs and the phoropters and the stands and the slit lamps and the Volk lenses and all the inventory and the computers. The employees work for the 1065 partnership, so their payroll checks come out of the 1065. And so that's what I have my 1/3 or 25% or my 50% interest in. And then below that, each of the partners forms their own LLC. And then I can elect to have that LLC that I own individually taxed as a sub-S corporation. And so what that allows me to do is that however we are going to pay ourselves, the money flows out of that top entity, out of that partnership. And remember, those are disregarded entities, so there's no tax at that partnership level. So the tax is paid by me individually. So the money flows out, and we'll just use an example. Say we had a partnership between two of us, and there was $500,000 of net income to divide. And just today for the webinar, we'll make it easy. That $500,000, $250,000 got sent to me, to my S corp, and $250,000 got sent to my partner. And now inside of that S corp, I can do with that money anything I want. I can salary myself. I can take a distribution. I'll be eligible for a qualified business income deduction, the QBI. And the benefit of that is generally when you have multiple doctor owners, not everybody has the same philosophy about how they want to spend their dollars. And so someone may want to run spouse compensation through. They may want to pay their children's expenses, child care expenses. They like to push the limit on what is deductible. And so they want to deduct things against their income that maybe another partner doesn't want to. And so this is a model that works very, very well. Again, where you've got a partnership on top, and below that, each of the owner doctors has an LLC that taxes a sub-S that their individual income flows into, because that top entity does not have to pay tax. So there are a myriad of other ways in which this can be done, that you can think about. For those of you that obviously have an S corp, finally, if you've got an S corp, you can bring in a new partner by just the S corp issuing more stock from the treasury. The associate doctor buys that stock from the S corp, and then the S corp distributes that cash out to the owners. And this is something that our tax practice, we have a really sophisticated and a very accomplished tax practice at the Williams Group. We do lots of buy-sells that often many doctors, CPAs, just don't do a lot of it. And so this is something that that you certainly want to seek some help in a tax assessment from your tax professional. And then again, if you have a sub-S corporation, you can certainly, the other option besides issuing stock from the treasury, you can also sell your stocks directly. If I own, 50% of the shares and I want to bring in a partner, and I can sell them 25% of my shares directly. And of course, those proceeds will go directly to me, the selling doctor, and I'll pay capital gains on those shares. That's probably not quite as desirable as option A, because each partner then has to figure out and calculate their own capital gains. And then finally, very similar to this, you can sell an interest in a 1065 partnership, but it's very complex. Partnership accounting is very complex, and really a little bit beyond the scope of today's talk. So those are kind of the 6 issues to think about. I hope that this has been helpful. I'd like to offer all of you who came on today, we have a full on accounting service and tax service at the Williams Group as one of our verticals. Our CEO is our tax guru at the Williams Group. Brad Rorick is our CEO and is also a CPA, and is our lead tax partner in our tax group. Brad probably knows more about tax accounting, especially as it relates to optometry, than anybody in the country. And he'd be happy to offer you a free and a complimentary tax consultation. You can reach Brad to schedule a call at brorick@thewilliamsway.com. And if you have anything that kind of piqued your interest today and you'd like to learn a little bit more about how we can help you with an appraisal, or how we can help you with partnership consulting and buy-sell consulting, you can reach my colleague, our Executive Vice President of the Transition Division, Tammy Suffolk, at tsuffolk@thewilliamsway.com. And before we end, I'd like to thank all of you for joining us today. If you have any questions, we have a couple more minutes here. If anyone has a question, you can certainly indicate it in the question box. Or if you think of something when we're done, just email us. You can also email me directly at bnolan@thewilliamsway.com. So if you think of something that you forgot to ask, I'd be happy to answer it for you. Again, my email is bnolan, BNOLAN, @thewilliamsway.com. Thank you, doctors, very much, and enjoy the rest of your day.